much can I afford in St. Louis? And joining me today is my wealth building partner, Glenn Calvin from Guild Mortgage. Thanks for joining me again today, Glenn.
Glad to be here. Talking about the move-up buyer today.
That's right. I'm Angela Dillman here at the Dillman Group at Keller Williams Realty Chesterfield. So,
you tell me what does it mean to be a move-up buyer?
wow. So I've got my first house. We've seen quite the appreciation in the last 5 years. So let's just say you bought a house 5 years ago. You've probably got a good 50 to 60 grand equity sitting in that thing easily. If I bought a home as a $260,000 first-time home buyer, or maybe a $200,000 home buyer, right? So now I might have a down payment on a new house. So what did you say my three first most important numbers that you're going to look at?
Down payment, monthly payment, and income. Those
there
three
you
things.
go. Your debt. There's actually four numbers. I keep saying three, but there's really four because he's saying payment and debt.
Right.
Is
well, we
your
should
fourth
say just
number.
payments.
Yeah, payments in general. Okay. So I'm this, I want to move up now, Glenn. I need to know what my income needs to look like. Do I need a larger down payment on my second home? That's one of my questions I would have as a move-up buyer.
That's an interesting question because technically you do. A minimum down payment on your first home is 3%, and a minimum down payment on your second home is going to be 5%.
5.
Now you could do another FHA loan at 3.5%, but typically we're looking at a little bit more. But most of those people have the move up.
Okay, most people. Okay, I want to know how much I need to earn. So here's a scenario I'm going to give you, Glenn. I want to go buy a $400,000 house.
Okay.
So first of all, can I find a house for $400 in St. Louis? Absolutely. Our average price point is $335. So you're going to find that $500,000 house. But let's just say I want to go out and buy a $400,000 house.
Right.
And we discovered last week that the average debt, without counting the mortgage or rent, right, is about $550 a month. Mm-hmm. So it's your credit card, it's your student loan, it's your car payment.
Right.
Right?
So in my example here, we assume we're going to be putting down $46,000.
46, because I've got about probably 50, 55, 60,000. So I probably got my down payment and some of my closing costs sitting in my house, so I can tap into that equity.
Right.
All right. So I'm going to put down a chunk. Rates are still 6.5% for this scenario.
You wish
don't make
they
my
were.
Head. Don't make my head hurt again.
So you wish they were 6.5%. For this one, they're not. The rates are different. They're a little bit lower for the FHA. They're going to be slightly higher for this one. I did this one at 6.875.
Okay, 6.
And the APR is 7.
Why am I higher? Why do I have a higher rate?
You're higher because FHA gives you lower interest rates, and as you go up on these bigger loans, we talked about this before. The market isn't there to buy them, so you're going to pay a premium. In July 29, 2025, for a bigger loan, the interest rate is going to be higher.
How interesting is that?
Yeah.
So why is that? So the more I want to borrow, you're saying that when the bank initiates the loan,
right,
you're going to turn around and sell it to somebody.
Right.
And what you're saying is they don't want to buy it
why? Because they think the rates are coming down today, and they think there's more risk. They're not going to make as much money. They would rather buy the.
Wait a minute. So what if they're coming down? They're giving me the loan at 6.5. Why don't they just give me a loan at 6.5?
Because they're not there right now. Yeah, they're not there right now. So they're going to pay that lender a premium to buy that rate. That's how the lenders make their money. Now they're going to get refinanced in 6 months, 8 months, a year. So they're not going to make their money back.
The market even thinks these rates are coming down.
Yes, they certainly do.
So they don't want to buy the larger loans because they think you guys are going to be the first to refinance. Right. You're going to be hot on the heels of lower rates, basically.
Right.
So it might be a little bit.
Yeah. So the rate's going to be a
little
bit higher.
So a little bit more, and my APR.
It's not. It's closer to the rate. It's almost the same as the FHA. It's 7.392%.
Okay, so that's just all the first year's interest in your closing.
And that's all the disclaimer that we legally, whenever a lender talks about rates, we have to disclose this information.
Okay.
It's a law.
But don't make my head hurt anymore. So
we're
just going to look at this.
I'm not going to jail.
So what's the fixed rate we're looking at?
6.875.
6.875.
And that payment would be $2,325.53.
And then when you add on my taxes, which we're saying 1.25% of the sale price.
So $417 for the taxes.
And how much for my
I
insurance?
figured $2,400, so $200.
$2,400 could be a little higher.
We're not putting 10% down, so there's going to be mortgage insurance, and that's going to be $133.
All right. So what's my total payment going to be?
On this example, $3,075.53.
$3,075. So almost $3,100.
Right.
Is going to be my payment if I've got some equity out of my first home to put down on this one,
Right.
and I'm going to buy a home around $400,000, so I'm really only borrowing somewhere around 350, 355, whatever it is.
The loan amount
Right.
on this one, yes, is 354, right on the nose.
Okay,
Right.
super good. So
That payment all in 3,075.53.
I need to know
assuming-
what I need to earn. What does my income need to look like if I have $550 a month in debt? It's not my mortgage. Now I've got a $3,100 mortgage payment.
So again, we're painting with an extremely broad brush,
Yeah.
but in general, on this example, about 90,000 a year.
About
And
90,000.
again, Angie, that's combined household income.
Right. So about 90 grand will buy you about a $400,000 house.
So that's
in
gonna.
Florida.
We talked last time about the area. So this is gonna open up a lot of areas for me.
Right.
400.
Right.
I imagine there aren't a lot of areas where I'm not gonna be able to buy.
Right. Well, it is going to open up some areas for you. So let's take a look at that. So in St. Louis County now, all the ones that we mentioned last week, you're definitely going to buy in.
Right.
Going to be able to buy in. But now, yeah, you're right. You're going to be able to buy in some more. Probably not the Country Life Acres.
No, that's $1 million too. You're gonna be making a little bit more money for that one.
Average of
You
$1.5
probably gotta
million.
know somebody to
Probably
get in
like
that
two.
one.
You probably do.
Yeah.
What I'm gonna, okay, St. Louis County. Let's take a look at it. Average price points that are around 400. Ballwin in Manchester.
Yeah, you back there. Nice.
How about that?
Yeah.
Now I can buy in there, and that's your 141 in Big Bend, your Manchester New Ballwin Road. So this is west of I-270.
Probably Ellisville's in
You know,
there,
can
too.
I buy in Clayton yet? Yeah, probably not. Probably not going to be buying in Clayton quite yet, right? 500,000 average is Creve Coeur, so I could find a $400,000 house there in Creve Coeur. Very nice area off 270, really, nice. Kirkwood,
You back in there?
average price point is 487.
Surprised
So
me. That
there's
seems low to
definitely
me. Yeah.
there's now you're going to get a smaller house there than you're going to get if you go further out west, because now we're creeping in toward 270, and on the other side of 270 now we're east of 270, I-270, right? And now we're getting Kirkwood Webster. So can I buy in Webster Grove for that? You can. Webster Groves has an average price point of 365. So don't let sometimes people are like, oh, I can't buy in Kirkwood and Webster unless I can afford a $5 to $1 million house. Well, there's a lot of $5 to $1 million houses in Kirkwood and Webster, but you
But
can.
there's also,
The
yeah.
average price point is 365 in Webster. Isn't that fascinating? So there are a lot of great points. South County, again, your Oakville, Melville areas, definitely you're going to be able to buy a nice home for $400,000 there. Now let's just think, what about St. Charles County?
So, yeah,
Can I buy in
definitely
St.
out there.
Charles County? Where could I buy in St. Charles County?
Right out Camelot.
So there's a lot of places you can buy for 400 in St. Charles County. O'Fallon, St. Peters, St. Charles City, definitely going to carry it. So there's a lot of nice areas. Probably not something like a Defiance or a Marthasville.
It's amazing because I grew up around there, and to hear that, what is the average price in those
It's
areas?
$715,000 is the
amazing.
average price point there. Isn't that amazing?
That is amazing. That's blue. What about
Yeah.
now? The move-up buyer's probably not looking at a condominium or a townhouse, but maybe they are.
Maybe. Yeah, I mean condos for 400,000 are actually fairly nice. 400 to 500,000 are very nice. But your condo fees in that price point is probably going to be more than $400 to $500 a month
Right.
these days. Which, let's just say, I've got a condo. I want to buy a condo for $350,000, and I've got this. Let's just say, I don't know, $350 a month condo fee. How much more a house could I have bought?
Well, that's a great question.
Really? Because I mean, like it's
Move my
6.5.
calculator.
It's like $6.32 a thousand.
Right.
So, right. So if I just take $6, even into $350 a month, what am I? $60,000 more in a house.
Yeah, that's where I got to get out my calculator and go to work.
Yeah, it's $60,000
Right.
more of a house. So if I buy a $350,000 condo with a $350 a month payment, I could have bought a
$410.
house for $410. So, condo, house,
Yeah.
Depends
Usually,
on
typically, that
lifestyle.
move-up buyer is probably looking more at houses and condos. That's just what I see.
Right. So there's, if you like a list of areas where the average price point is around there, we could definitely send that to you.
Yeah.
And you could say, hey, these are the areas I could go to, because that's the biggest thing. Our buyer's agent does this really cool thing where when you get online and you're like, hey, I want a 3-bedroom, I need a finished basement. I want this size of a yard. I want a 3-car garage, whatever it is. I want that pool. He'll get online and he'll show you all the houses available, and then he'll start putting your criteria in and your price point, and then you'll see all the houses disappear. And you'll see exactly on the map where you can find everything that fits your criteria and your budget. So it's a really fun exercise.
So it's nice talking about the budget. I do a lot of work with these move-up buyers where we'll look at what they're going to realize from selling their house. And a lot of times those are the ones they're going from a 2.5 or 2 7/8 interest rate. But they've got more equity than 10% down. And they're putting down such a big chunk that a lot of times the rate's higher, but the payment isn't that difference. The other thing that's really fun, and I enjoy working with that move-up buyer, is looking at, yes, I'm going to get this money when I sell the house, but now I'm going to pay my car off. Now I'm going to get rid of all my credit cards. Now I'm going to get rid of some student loans.
There you
So
go.
now, yeah, my payment is higher, but my monthly outgo is actually lower. So that's the fun and the challenge, and again, the junior high math problem with the move-up buyer, because there is a lot that you can do, because you bought this house, you fixed up, you've enjoyed this crazy appreciation that we've seen in St. Louis. There's a lot that you can do with that money other than just sinking all of it into a new home.
So if you were looking at the $400,000 to $500,000 move-up buyer house, your second home, and you earn around this 90 to 100 grand, it's going to get you a really nice house.
Heck yeah, and it's going to open up a lot of areas for you.
Going to open up a lot of areas. Yeah, very fun. So next week, I guess, we're going to look at maybe the dream home buyer. Right?
Yes.
It's my third home.
Lifestyles
or my
of the rich
fourth
and famous.
home.
Country Life
Lifestyle.
Acres.
We're not quite there yet,
No.
but maybe we'll look at that and we'll see how much money you need to earn on that one.
Perfect. So we say this all the time, like and share.
Like and
Our
share.
numbers are on there. Call us. This really isn't. This is great talking about this, the big picture, the 50,000 square feet. Getting down in the weeds is something we both enjoy doing.
Yeah.
And looking at your own individual situation.
Yeah, there you go. All right. Join us next week when we talk about the lifestyles of the rich and famous. All right. See you then.